the numbers came in broadly in line with economists' expectations. But when we look at the detail inside the data, what we find is that the private domestic part of the economy is basically flat, making almost no contribution to economic activity. It's really the export side and particularly public spending that's been propping up growth, if you like. So we've got a very deep per capita recession and an economy where growth now is slowing. Now, for the RBA, though, what they're really focused on is what we call the output gap, which, of course, is aggregate demand relative to aggregate supply. And we've had a positive output gap, and so we need this slowing in the demand side of the economy in order to close the output gap so that the central bank can become more confident that inflation is returning sustainably to the band. Markets are trying to look for the opportunity for the RBA to cut rates this year. And of course, we're seeing that in our global peers. We don't think that will happen. We've got our first rate cut in February, and today's data doesn't change that view for us.
Indeed. And how do you think the RBA would look at this data, look at the inflation data, look at the unemployment data, the jobs market, and then assess what monetary policy action needs to look like going forward at a time when the RBNZ has cut rates, maybe the BOK, the Bank of Korea, may be contemplating a rate cut, who knows, and the Fed clearly is moving in that direction?
We are seeing our global peers cut rates. Now, New Zealand is an example where the economic data turned very quickly and very consistently, and the economy is in recession. We're in quite a different position here in Australia. While the GDP growth numbers are quite weak, as I said, the level of activity has been quite strong and the labour market is slowly easing. The unemployment rate has lifted 80 basis points off its cyclical low compared to 140 basis points in New Zealand. So we're seeing a much softer adjustment here. Inflation is still well above the target and only very slowly and gradually coming down. And partly that reflects that decision by the RBA deliberately to take a somewhat different path. We didn't raise the cash rate as much. Policy is not as restrictive. And so it's taking longer for inflation to come down, but we're protecting those gains in the labour market.